Welcome guys, this is Alpha Max Partners owned by two chartered financial analysts who left their top-tier firm to empower retail investors after GameStop scandal. With more than 10-year experience in research and trading, our main goal of this YouTube channel is to educate retail investors and to help them in minimizing their trading risks. So, please subscribe and click on notification bell icon to help us grow fast and gather all rational retail investors at one place. In this video, we will discuss following points. What is a penny stock? How much money do you need to start penny stock trading? How to narrowing down penny stock list. What to do and don't while selecting a penny stock. How to select best penny stock. Let's start our video with a short intro of penny stocks. For many beginner investors, the first logical stop is penny stock. As name suggests, penny stocks are those companies that trade with a low share price, often less than $1. It's understandable to see why rookies get hooked by the dream of buying into a company for only few cents and then selling for a substantial profit when the price trades back in the multi-dollar levels. The extremely low prices allow an investor to hold thousands of shares for a relatively small amount of invested capital. With that scale, the gain of just a few cents per share can translate into big percentage returns or big percentage losses. But here's a fair warning. Such stocks are generally considered to be highly speculative and high risk for several reasons. Their lack of liquidity, large bid-ask spreads, small market capitalization, limited following and limited disclosure. The allure of penny stocks is simple. They don't cost much money and promise big profits. But trading penny stocks is also a good way to lose money. Sure, it's possible to profit when you understand the game, but the odds are against you when you don't. And worse. Manipulators and scammers often run the penny stock game. Penny stock promoters make sure to attach a disclaimer to their email, Twitter, YouTube video, or Facebook page and take advantage of this language to embellish and deceive. Even with these clear dangers, some people insist on trading the pennies. So, if you find yourself on the receiving end of a telephone call from a penny stock promoter, or you spot an advertisement that promises dollars from your pennies, or you watched some YouTube videos promoting penny stocks with huge subscribers, and you still decide that maybe penny stocks aren't wooden nickels, then watch our video completely to understand penny stock trading. Next question is, how much money do you need to trade? Penny stocks do not always cost a mere single cent. However, they are inexpensive. These stocks can be under $5, or these stocks can even be under $1. At such a low price, investors can purchase a plethora of these hot penny stocks and can even buy these stocks online. This strategy means that even if a stock increases by just a few cents per share, an investor could make a decent profit. However, investors should enter this situation understanding that penny stocks have no solid rules regarding how much one must initially invest. Nevertheless, some factors can affect one's investment in penny stocks. There are a number of penny stocks to buy in 2021, and, by paying close attention to the following tips, investors can maximize their investment, even in an often volatile market. It should also affect how much you are willing to pay a broker, how many stocks you want to hold, how long you intend to hold those stocks, and how much money you want to ultimately earn. Some of these factors, such as how much money you will earn from stocks, are impossible to predict. However, if you set goals with respect to the date by which you want to achieve your goal and the maximum amount of money you are willing to risk on buying penny stocks, your time as an investor can be more profitable, or, at least, less stressful. We always advise to penny stock traders to not buy penny stocks if your goals have low risk tolerance, like you want to save for your retirement or to help make your child's college fund. Try to trade penny stocks only for aspirational goals when you already had enough savings for your primary goals. Now, we will move to our third question: how to narrow down a broad universe of penny stocks. To determine what stock to trade. One popular method is to use stock screening tools, such as the one found on the OTC Markets website, or Finviz. Screening for stocks with a price under $1 is the easiest way to narrow down the trading universe. From here, you can filter the list down further depending on your strategy and risk tolerance. Maybe you are only interested in penny stocks that conduct business within the sector of apparel stores, for example. In this case, you'd make the necessary adjustments and then run the filter. Once you get the hang of using Finviz's stock screener, your list, based on the filter above, should look something like this. For what to do and don't, just remember these 7 golden rules. First, ignore success stories of penny stocks. This guideline falls right in line with watching for stocks' real-time earnings. Companies, emails, and social media can say all manner of reassuring words concerning why you should invest in certain penny stocks, but, unless they have proven real-time earnings, be wary of any words. If you want to cross-check real earnings of the firms, try using Doco.com. Link is available in description. It has a breakdown of financials and summaries of SEC filings. Also try to search what we look before investing in penny stocks, 10K and 10Q filings, Form 8K, company updates, and also look to see if they did a recent offering, S4 filing, and for upcoming dilutions, S3 filings. Second, always read disclaimers. In reality, penny stocks sold more than purchase. Mostly via tips that you receive through emails or newsletters or by messages on your phone. The free penny stock newsletters are not giving you tips out of the goodness of their heart. Famous investor Sykes said. If you read the disclaimers at the bottom of the newsletters, they are getting paid to pitch a stock because their investors want exposure for the company. There is nothing wrong with wanting exposure, but almost all penny newsletters make false promises about their crappy companies. Many newsletters don't tell you the truth because they are compensated to pump and dump stocks. Third, sell quickly as soon as you achieve your target return. Don't be greedy for 1000% return. You can make 20% to 30% in just few days. If you got that kind of return, sell it quickly. Considering that stock might be pumped up, play safe and take your part and try to move on next stock. Fourth, focus on penny stocks with high liquidity. Stick with those penny stocks that have an average daily trading volume of at least 100,000 shares. If you trade with low volume stock, it would be difficult for you to close your position on your desired point. Fifth, use mental stops. Because the bid-ask spreads on many penny stocks can be high, as much as 10%, hard stop losses can actually cause you to lose money because of commissions. So, try between 15% to 30% stop loss based on your risk tolerance. Sixth, don't fall in love with penny stocks. Penny stocks have a very bad reputation. So beware. Every penny stock company or advisor will try to sell you a story about future of company that they will change the world or revolutionize the world. If you buy penny stock, be rational and try to do own research and diversify your stock, even the advisor is your close friend or relative. Seventh, don't make large trades. Don't use large trades, try to not trade 10% of daily trading volume. It will help you to close your position as quickly as possible. And finally, to know how to select best stock? Use this framework. Most companies that trade with share prices under $1 have relatively small market capitalizations, but this doesn't always have to be the case. When it comes to investing, it is important to consider the strength of the company's fundamentals. Does the management team rely on issuing new shares to raise capital? Is the company profitable, or will it be able to turn a profit based on its current business structure? Can the company compete in its sector? For those willing to do their homework, there are definitely gems that can be found that meet these criteria. When most retail traders look at a penny stock, they often ignore underlying fundamentals, such as the number of shares outstanding. As is the case with all investing, it's important to examine a company's underlying fundamentals and overlay this information with details, such as how badly the shares are being diluted through the use of stock splits, stock options, and issuing new shares to raise capital. Share dilution hurts existing shareholders, and it's particularly common with penny stocks. Keeping an eye on the share structure and other fundamental factors mentioned above will help investors find winners. Hope you like this video and will be able to do due diligence when somebody recommends you any penny stock. Please like and subscribe to help us grow faster and make more videos related to stock forecasts. Thank you.